Hello, welcome to the podcast, Two Accountants, One Mic, Your Questions, with me, your host, Mark.
And the co-host, Tom Bell. We've decided that a great method of answering the most common and relevant client questions was via a podcast.
We're frequently getting asked at the moment about the changes in the budget that are intended from April 23.
Yes, I mean, we're getting significant numbers of questions from clients. There are a number of changes afoot from the 6th of April 23, some which will affect a large number of taxpayers, some which will affect less. One of the changes that I don't expect to affect the majority of people is a reduction in the additional rate threshold from £150,000 down to £125,140. I mean, for an average additional rate taxpayer on £150,000 a year, that's an extra cost of £1,200. A change that's more likely to affect clients who expecting to sell a residential property, the capital gains tax annual exempt amount, or that's the tax-free amount, is going to have down to £6,000 from £12,300. Now, just to put that into perspective, that will cost a basic rate taxpayer an additional £1,100 in selling a residential property. The dividend nil band is going to have down to £1,000 in the 2023-2024 tax year. That'll cost the basic rate taxpayer an additional £87.50 a year, or a higher rate taxpayer £337.50 per year. One of the changes that's going to stay from the mini budget is for first time buyers, the nil band for stamp duty land tax will stay at £425,000 and £250,000 for existing homeowners, and that's still effective until the 31st of March 2025. So those are the most common changes likely to affect individuals. How about companies?
Yeah, from a company perspective as well, we're due to see a significant hike in tax. So basically, limited companies are presently used to paying around about 19% for the corporation tax. It's subject to allowances claimed. What we're actually seeing is that the corporation tax rate itself will increase from 19% to 25% on a sliding scale for profits between £50,000 and £250,000. So that itself will require some planning in terms of how amounts how allowances are claimed through the company, and also the personal tax planning with the associate directors and shareholders. But of course, everything that we've just discussed is subject to change for the scheduled budget next week, that being Wednesday, the 15th of March.
It's unlike the government have made any fiscal changes at short notice.
Absolutely. That gives us around about 15 days to rework everything and come back to you with updated calculations. But of course, that's our job and that's what we thrive and love to do. So we'll do our best for you. So on that basis, we're putting a full stop on the budget announcements and the implementation of it. And we're going to make that our topic for next week. So next Friday's podcast will have a detailed breakdown, shakedown of what to expect from the implementation of new tax rates.
So in this section of the podcast, we're going to cover in more detail MTD, or Making Tax Digital for Income Tax Self-Assessment. It's one of the most significant shake-ups to the tax system since the introduction of self-assessment.
Yeah, this one's a particular interest to me, Tom, because I know it crosses over with a lot of what you do from the income tax department's perspective. Is this something that you've had clients maybe rolling their eyes at, saying, why me, why my business, not another layer of bureaucracy from the government? It's
certainly not a popular choice. One of the most difficult points to communicate on that is that it's been a legislative change. It's certainly not our choice, certainly not our preference necessarily. There are benefits to it and there are also drawbacks.
So as a client, basically, what's the first thing that I need to be aware of? When was this due to come in before the delay?
This was supposed to be effective from the 6th of April 2024. That's been delayed another 2 years to the 6th of April 2026.
Okay, so just speak to me like I have no idea on income tax, which you might feel applies given the amount of personal tax work I hand over to you. But what does it actually mean in terms of when am I caught by this? So let's imagine we fast forward a little bit and we're closer to the deadline, and I'm getting advice from my firm, my advisor, that I need to consider this and roll out. What's the trigger point for me needing to do this in terms of turnover? What does that mean? What's that look like?
Okay, so MTD for income tax self-assessment primarily affects landlords and sole traders. So for landlords and sole traders with a total gross income of £50,000, they'll be required to file returns through MTD. Now, when I say gross income, that's the combination of turnover and rents prior to deduction of any costs.
So this could be an individual whose personal tax may show little to no taxable profit, but it's actually the trigger point is the turnover. So you have to have a good record keeping to understand what the turnover is for each of those things, and as a combined, as soon as you go over it, then that then captures you for this, does it, Tom?
That's correct. Yeah. So just to put that into perspective, you could, for example, let out a property with annual rents of £10,000. Have a self-employed trade with a turnover of £40,000, excluding any cost, you would automatically be affected by MTD itself.
Okay, so when you look at this and consider it, we're used to if you like, implementation of the deadlines, and also used to registration limits as well. But this basically means that we have a new layer, if you like, that the government have picked. So traditionally, a business with a turnover of £85,000 or more would have to be VAT registered and would be automatically caught by MTD now. But we're now actually seeing a section of clients across our client base that are going to be caught by this and probably not used to using any software at all because they've not needed to.
That's correct. And as it stands at the moment, the majority of sole traders who aren't registered for VAT, and until quite recently, lots of VAT registered sole traders are probably used to keeping books and records on paper. That will still be possible, and unfortunately, the requirement to file quarterly reports using digital accounting software will be mandated by the government.
So let's look at the obvious negatives from this. So if my accountant contacts me and says use our preferred software provider, the first thing that you're going to be looking at is the subscription cost, I'm assuming. What do they range from roughly, Tom, normally?
So the most simple packages can range from £2 a month up to the more complex options, dependent on the size of the business, up to about £25 a month. Again, if the most expensive option was suitable, you more than likely are already MTD compliant. It's likely that you'll probably be registered for VAT. Now, for the most basic business, there are options that start at just £2 a month. Okay,
so looking at this in terms of a client that's maybe currently used to doing their self-assessment returns, filing them by the following 31st of January, and making payments on account as applicable. Is it looking like the payments on account system will change with this, i.e. quarterly payments of tax immediately? Is that penciled in, or?
At the moment, that's not been confirmed.
Okay.
Now, various tax authorities abroad do go for a quarterly payment system. For example, the IRS in the States, they do go for a quarterly payment system. Now, at the moment, that's not been announced. There will be a quarterly reporting system of income and costs. How that will play out, we don't know.
Yeah, I know you recently attended a seminar with Xero, and in terms of them looking to roll this out. Admittedly, this was prior to the government delaying this for a couple of years. For say like a company like Xero, we're not the first country then to roll MTD out then?
Various other tax authorities abroad do have a quarterly payment system for their own cash flows. It's not necessarily something quite like MTD. I know New Zealand, Australia do have a system that's very similar to how MTD is going to work in the UK. It's obviously not quite as simple to roll out as I think the government probably expected. There's a lot of moving parts, great difficulties, and obviously commercial, you're forced to use a commercial software package.
Yeah.
They need time to develop it adequately to be compliant with the government's rules.
Yeah, so from the first perspective, we dealt with the cost there. I suppose the next thing we're looking at is something that's equally as precious to individuals, and that's the time as well. So undoubtedly, certainly with the rollout of this is going to take time for people to get used to, and will take time out of their week to maybe administer things to if you like a higher level than they're maybe used to, if we can say that, a bit more like what they could potentially perceive a fully trading business with employees to look like. It does mirror that, doesn't it, where you've got a real live snapshot, if you like, of the bank of sales invoices, purchase invoices, doesn't it?
Yeah, I mean, it will force people to keep far more detailed books and records than they may be used to keeping. Now, that doesn't always necessarily have to be a negative thing. There is the additional administrative burden for people, whether that's put onto firms like ourselves or whether that's taken by the client. It will require a significant amount more admin and bookkeeping work.
Yeah, so let's try and be the eternal optimist on this. Really, one natural benefit that I can see, and data is key and king with the performance of your business, is that you'll actually have the ability to review your business maybe more in a detailed way, because as we're aware, if you're just handwriting your invoices, if you want to know how much you've invoiced in a month, a week, a quarter, a year, that requires a degree of time and effort to achieve that. With a lot of these software packages, you're actually able to use that data, so you can track your monthly performance, your monthly expenditure, your cash flow, whether that be positive or negative. And you can also get an understanding of your tax position, which I think from the demos that you've seen, that they are tying something in with that regard, aren't they? Particularly?
Yeah, that's correct. I mean, the demo that I've seen, I can't talk too much on it. It is just a beta test at the moment. Now, that did give a quarterly estimate of income tax and national insurance contributions, which could be something that is particularly useful for people. It's great for us. Allows us to bring in planning points maybe in the third quarter of the year. We can ask clients, have you considered a pension contribution? Have you considered a charitable donation? Have you considered buying some plants and equipment? It gives us far more flexibility and freedom to potentially prevent some issues that, had it been continued the way it is now, that opportunity may just have been lost.
Yeah, 6 months down the line, us picking up some books post a tax year end and saying, have you considered this, have you done that, is not always a popular, or had you considered that, should have said, is not always a popular conversation to have with the clients. So certainly from that regard, I can see some positives, and even linking that into the limited company world, it would enable us to maybe have more synergies between the departments and identify as and when, say, a limited company might become the perfect moment for a client to incorporate, instead of again relating and relying, I suppose, on a full year's record to be able to drop in on a client's data and get the information that we need quickly. Then will provide us the chance to work within our respective departments and hopefully give the clients the advice that they need. And moving on from that, of course, as a firm, we're actively working on a strategy, I suppose, to how we will roll this out, and we have every intention of walking our clients through that process. And I know we're already in the infancy of that, aren't we, Tom? Which we're not going to go into too much detail on today, because I think that's maybe for a longer episode. But you've already spent significant time on profiling the clients for the Scunthorpe and Lincoln office, haven't you?
Yeah, based on the original thresholds, the new threshold, and an expected future threshold of £30,000, we've profiled our clients of the practice. So we're fully aware now of the scale of MTD, how many clients it'll affect and which ones and why. Okay,
that's great. So I think what we'll do is we'll leave that MTD section there. And of course, if you've got any specific questions, please contact us as per the details on the graphic, which is displayed below. Thanks. So, having dealt with some more dry matters, MTD and budget changes, we thought it might be useful for you to learn a little bit about us. So, given that you're not used to the voices, this is Mark speaking, and I set this firm up in 2017 with the aim of really trying to create something that I believed in, having worked in other practices for about 20 years. A lot of firms, I think, today make great emphasis on being modern and high tech, and that is important, and like everything, you've got to harness the capability of that. But also, I was very fortunate to work at some traditional firms, and the approach taken by them actually delivered high levels of service and thirst for accuracy, and for clients being given the time and opportunity to understand their figures, and that's something that I hope if you're a client of ours that you feel that we're delivering on. So the practice itself really started with myself and Stuart, as I said, in 2017, and since then we've now acquired another office which is over in Lincoln, and we now have around 24, 25 staff members, and one of those staff members is my co-host Tom.
Yes, so as Max just introduced me, my name's Tom. I started working for the practice in 2019. I used to work at the Scunthorpe office, and then when the Lincoln office was acquired, I was transferred over there. Currently in the process of finishing off a couple of exams. Then it's likely we're beginning the CII, that's the Chartered Insurance Institute exams. I think something that we're looking at doing is broadening out the services that we're able to provide, and bringing in a couple of experts on the podcast.
Yeah, I'd agree with that. The ultimate aim for the practice is to either provide internally the services that a client in business needs, or have strong partnerships with outside providers. And I do think it would be useful on the upcoming podcast to I suppose go through the common pitfalls of maybe not understanding insurance, any legal element to running your business, inclusive of health and safety regulations, and then going more, I suppose, granular on the individual. We're talking wealth planning, financial advice, and also wills, because I think it's quite common that you get questions on that from clients as part of the tax return, isn't it itself?
Yeah, I mean, we get given a broad spectrum of questions that don't just relate to tax. Some areas we are just not able to advise on, and it's important for us to be able to provide the clients with a full and broad service to either have another organisation that we work with and ask them to service the client in that area, or be able to complete that element of work ourselves.
Yeah, great. Now let's talk about the burning question, the digital display at the front of the Scunthorpe office.
I've definitely had some mixed reviews and comments from members of staff. There's some interesting photos of staff on there.
Yep.
One of the more widely regarded points, just in respect to clients, is we are able to offer a free advertisement service. If you pop over an image that you'd like advertising within reason onto the marketing team, so that's led up by Sophie, we'll be able to put that on the marketing board.
Yeah, joking aside, of course, the reluctance to have your face displayed 24 hours, 365, 7 days a week is an employment requirement of working for the firm, and perhaps linking it back into the earlier comment, maybe some of the staff could listen to the podcast and learn a thing or two about what the sign. But the idea of having things like this is for us to try and engage with the wider audience in many different ways, and hopefully provide information that's relevant, that you can digest, that you feel takes it to the level that would naturally then require a more detailed review of it. And myself and Tom and the rest of the team are dedicated to existing clients and potential new clients, and trying to ensure that we're consistent with the service that we offer. And that's something that we want this podcast to portray, the digital display at the front, and everything else that we do. So we're pretty much going to wrap the podcast up there. So how was the first one for you, Tom?
Not as nerve-wracking as I thought it would be. More enjoyable than I thought it would be.
Yeah, that's good to hear, because we're doing one of these quite regular, so that's definitely the right answer. So we're going to look at least a monthly podcast, and keep it relevant to the questions that you have. So you can shape the way that this podcast goes if you want a particular topic dealing with. But as I say, we will be doing a special one next week following the budget. So we will try and give you a little bit more detail with that regard. So that's the end of the podcast. So it's a goodbye from me, Mark.
Goodbye from me, Tom.
Take care. Thank you.